Okay, and if it is your first time just on this call, obviously we've got a smaller number of people today, which is good. I always see it as a good sign that people know what they're doing, and kind of don't really need too much teaching anymore, but it's just now the practice and of the skills that they need to kind of put together. So if this is your first time on the call, drop a 2 in the chat box. Normally we have about 20 plus 30 plus on the call, so a much more smaller team today. So if this is your first time, drop that number in the chat box. If not, I will assume that you know what you're doing, and we'll just be kind of got disconnected. I got disconnected, apologies for that. Don't know what happened there. So let's just make sure it is recording, and it is fantastic. Okay, so I'm sorry I got disconnected there. If it is your first time, just let me know. Busy day at work, kids, but need to make more time to focus and increase trading knowledge and confidence, 100%. So my thing is, you know, everyone's life is busy. Everyone's life is so busy. And the thing is, if you break down your day, it's about being organized. One of the things that worked for me is organizing my time. Now, I've been seeing people, oh, they've won this, oh, they've grown their account to this. How much do you really want this? And if this is a real want, you will make the time. You will do it, because if you see everyone else winning, you see people withdrawing, you see people that have been able to, I'm sure you've heard and you've seen it as well. Obviously, we're all part of AFA. People are putting down, you know, they've been in it for maybe 2 years, but they're using what they have grown their account to as deposits for houses. They're using it as investments. So whereas before they used to use the money that was coming into them through their work or through their 9 to 5 or through whatever means that they were doing, they're no longer touching that. They're now using residual income from this academy to pay for the subscription, to pay for other things that they want, you know. So it is really, really important. And you know, for those that are mothers on the call as well, I keep saying this, like there's a lady, Mary, she's on this call as well. She's just given birth. She gave birth 2 weeks ago. 2 weeks ago, and she's still plugging in. So, you know, we're going to have 1,000 excuses. You know, I'm really tired today. Work was busy. Like, for example, myself, I got back in about an hour ago because I took my daughter to an appointment in London. So we've got loads of excuses. We'll never run out of excuses. So schedule time for your success. You know, there's no way you can do this and say you've set aside a certain amount of time every single day at the beginning of your day, every day, and you found no results. You saw 0 results whatsoever. It's consistency. How consistent are you being with practicing? How consistent are you being with actually, fair enough if you don't want to trade with the other educators, how consistent are you being with watching some of the educators that are on the platform? They didn't get to 6 to 7 figures overnight. They all started somewhere. So it's really important. Oh, Peter. Yeah, it's really important to, you know, to just plug in and give it your all. Because I think I saw this somewhere. It's a quote, but it says, after you quit, what's next? What better is next after this? You see the success around you. So just keep plugging into everyone. That was just a bit of encouragement talk personally. But all of you know me, so I won't go into myself again. We're going to get straight into Liberty training. So if I go to my, let's go straight on to my Safari, just click out of my emails, do not save. Okay, so there's 2 ways you can access Liberty. So you can either go to im.center to get in, or you can just type in Goliberty.im. So as you can see, I've gone to the im.center, and if you scroll down to strategies, you will also see Hfx. Now, one of the questions that have been popping up in various groups is the question about Hfx Swipes. Now, Liberty is the free package. This comes free with your Hfx package. Hourglass is the add-on. So if you've ever heard of Cash Trap, this is what most people are using. These are for 3-minute trades. Most people use Liberty. Why? Because they like the fact that they can go in for longer trades, okay? And Hfx Swipes is the app. So all of you should have had access to the app. You should have played around with it. You've all been able to profit from it. Someone was saying they were out shopping. They got a ping on their phone. They stood where they were. They logged into their broker. They looked, oh, it says for me to enter on this currency at this time for this long. And they took the trade and put it back into their pocket. At the end, oh, did I win the trade? Oh, yeah, I did. You know, so as your account grows, I know obviously for those that are just beginning, that might be only £20 or £30 or whatever amount. But for those that have larger accounts, that could be easily £200 to £100, you know? So Hfx Swipes is great. But once again, if you're going to be paying for the app, make sure you're utilizing it. Make sure you have, maybe even if you have to have a notification ring, maybe it rings a certain way so you know and you pay attention to that alert. So you just need to kind of know what kind of trader do you want to be. Do you want to be a trader that's like passive, so it just tells you when to enter, or do you want to be an independent long-term trader? You want to learn and master the skill for yourself so that you are able to trade when you want to trade at the times that you are able to trade. You can fit it in around a lot of things. Okay, so Liberty is what we're going to be opening and looking at today. I'm just going to click out of that one. And once you open up the panel, the first thing you are going to see is that it's on a 1 hour time frame. Okay, so the 1 hour time frame is a default. It's always set to that. And that basically means that every single one of these candlesticks that we see is representative of an hour. Okay, so what we're currently looking at is GBP CAD. So this is what's selected in this alert panel here. And it also tells us the currency strength. So for example, it's telling us the Great British Pound is 31 and the Canadian dollar is 76. Which currency is stronger? Obviously, we can see that the Canadian dollar is stronger. Okay, so based at the top and the bottom, the Canadian dollar is stronger, being the bottom currency. So that means we want to sell because this is heavier. So heavier at the bottom, sell, heavier at the top, buy. Okay, so let's look for one that is a buy instead. Let's see. Okay, so like this one, AUD JPY, let's just move it to where it is. And we know we want to buy. Why? Because the AUD is 59. Okay, so always look at the currency strength. You want to make sure that you're having them match up. Okay, so first rule is as soon as you come onto Liberty, what you want to do, it opens up in the 1 hour time frame. So step one is to drop this to 5 minutes. Okay, step one is to drop this to 5 minutes. And the reason why we're dropping this to 5 minutes is so that we can see if it's a good setup or not. And as you can see here, it's a fantastic setup. It's been a fantastic setup for most of the day. Let me not hype it up. Let me see the exact time. So let me go and set the time. If you open it up and at the bottom, it's not corresponding to the time zone you're in, just go and click UTC. So how I got here, just click on the time zone here and just change it to UTC. And then everything should match up and be at least closer to the time of where you are. Okay, so if I go and click London now, so you can see London is an hour ahead because obviously it's not UTC, it's UTC +1 because we're in the British summertime. And I click that, you can see now all of it is corresponding. So since, I would say, since about 3 this afternoon, it's been a great drop. Obviously, it was just starting. So when we're looking to go for a sell, we need price to be below the red cloud. So red cloud means sell, blue cloud means buy. And if it's a red cloud, price needs to be below the red cloud for a sell. And if it's a buy, we want price to be above the blue cloud for a buy. Okay, so for this to be a sell, we want it to be below the red cloud. Now, when you have a cloud appearing, I'm just going to zoom in as much as possible for those that may be viewing it off their phones or small tablets. Can you see the starting of this cloud is really thin? It's not really apparent. Okay, it's not really apparent. However, it starts to become more apparent, maybe from here, I would say. It becomes a bit thicker, it thins out and it starts opening up, maybe more so around this side. So from here is where I would ideally like to start looking for sells. But we don't just go on to 5 minutes and start taking trade setups. No, we do step one. So step one, is it a good setup? If it is, we go to step two. So we know this is a good setup. Why? Canadian dollar is 76, meaning it's a great sell, stronger than the first currency. It's below the red cloud. We also have these web strings, okay? So the reason why it's called Web Slinger is because we have these web strings, which actually just EMAs formed together. Okay, so they're all web strings formed together and they're nicely spread out. We know that they're spread out because we can see nice gaps in between it. An area where it is not spread out, just to give you some clarity, okay? Can you see these web strings? Let's zoom in here. Can you see how they're all squashed together? It's like having a guitar string that's squashed, whereas this guitar string is nicely spread out. Okay, so that's what you want. This signifies a good sell. Okay, so we go to step 2. Because we know it's a good sell, we go to step 2, which is changing it now to the 1 hour time frame. And this is what helps you avoid going in on trades that may have a reversal. So when I say reversal, in other words, you've gone in for a buy, and as soon as you click the buy, it was in profit for a while, and then it decides to drop. And when I say drop, I'm talking drop it like it's hot go. Okay, so this helps avoid it. Why? Because maybe where you've entered is at a resistance, or maybe where you've entered is at a support. So you will have a reversal because you've entered in at the wrong point. So by doing this that I'm about to show you, it helps avoid that. Okay, so what you're going to do is where you've got this horizontal line area here, you're going to change this to horizontal ray. I do prefer teaching horizontal ray. Why? I'm going to show you now. Okay, so horizontal ray is the one that has a dot with a line at the end. It means wherever you click, that is where the line starts from. If I decided that I was going to do horizontal line, it means I have the whole line across my whole page. And it doesn't really help me identify where I'm seeing resistance or support. So I'm going to stick to using this. And for teaching purposes, I'm going to be coloring it so that you know where the resistance areas are and you know where the support areas are. So if you are not too sure on resistance and support and resistance, then I highly recommend watching the videos in the academy. For my team, for those that are on this call that are in my direct team, you all have a checklist, a Hfx checklist, and that checklist shows you what videos you should have watched and understood before you even try trading independently. Okay, for those that aren't in my team, I have shown it before. It is Go Live. So if you go to Go Live, so I'll just show you here quickly. There we go. So you go to Go Live, you scroll down to where it says Pick Channel, click HFX, and you're going to be going to Millie Mills. When you go on Millie Mills, she really does, you know, I think out of the educator, she explains things fantastically. She really takes her time to explain, etc. So you have SRT and indicators. So SRT is an acronym for support, resistance, and trend lines. Okay, so you get to see that there. She does teach Liberty, but obviously these ones are the older videos. But as soon as you can see that, plan for your first 6 figures, understanding trend lines and RSI indicators, you're more than good. You can even watch some of these ones, how to become the best HFX trader. You got part 1 and part 2. Okay, so make sure you're utilizing this. Some people don't like videos, but you know, with most of these videos, they've taken the time to show you what to do. It's not a thing of just doing videos for the sake of it. Okay, so that is the video that you will be looking at to understand support and resistance lines. So back to where I was, which is these lines. Okay, so I've put in this horizontal ray, and this is my marking up of this zone here. Why have I marked up this area? Okay, I have marked up this area because this served as a main point as to where price rejected off from. Now, anytime you see these lines, okay, so you can see these lines at the end of the candle. This is basically the shadow of price. So this is how far price moved up to before rejecting down. Now, some people like to use these areas as points. You can do. So what you could do is put a main zone and put another zone so that you can see how far price actually moved up to before it rejected off. So price tried to go a bit higher and couldn't touch this ceiling and then bounce down. Where did it close? The main main support or main resistance zone that I marked up here. Okay, so as you can see, price pushed up, rejected, bounced along, price pushed up again, went through, but didn't close there. So when it closes, it means that it's a sign that price wants to go up now, but it didn't. It closed below the ceiling. And again, as you can see, price rejected off it, and boom, we had that big drop down. Okay, so that is our resistance area. For your support, which is your floor, so how low did price go? So your resistance is the ceiling and your support is the floor. I'm going to mark this up in blue. Okay, so resistance is normally red and support is usually blue. I'm just going to click it here and adjust it. And what you want to do, you want to stay as close to where price is as possible. Price is all the way down here. I mean, this is the main support. So we want to understand where did price break out from? And this is where it is here. Okay, so this is the main area, because don't forget, each of these candles is worth 1 hour. And we're going back to here, which is 8 o'clock this morning. So that's a good amount of time. We don't need to go back and look at 2-3 weeks ago or a day ago. But this is currently where price is, okay? Or price was before. Price was bouncing in between these zones. So came as low as this area here. And we know this because, can you see where the lines have closed? Let me just zoom in again. So price has touched this area and rejected off. Touched the other area and rejected off. Okay, so that serves as a strong zone. And what happened was it kept touching here, touching the resistance, and then decided to drop through, which is what we see here. And this is the lowest price has been so far. Okay, we know that price is going to continue dropping. It's just a matter of where price may pull back to. Okay, so what we're going to do, once you've done that on 1 hour, so once you've marked up that resistance and support on your 1 hour time frame, we then go to 15 minutes. Okay, so we then drop to 15-minute time frame. Why do we drop to the 15-minute time frame? Well, you can't go from a 1 hour time frame straight to 5 minutes to try to take a trade. There may be other mini support areas or mini resistance areas in this trade that you are trying to look at. And I can see a mild or a mild area here. I'm going to make it a bit thinner. And this is a mild area because price decided that it was going to touch this point, move up. So this is another area. So basically anywhere price is rejecting off, price decided to stay in here for a bit and then break through to the next floor. So imagine lots of little stairs, staying on one step first before moving to the next floor or the next step. That is what this does. Okay, so it's moved into this area here, and currently this is where price is. Now, this is not where we take our trades. We're going to be taking our trades from the 5-minute time frame, but you're doing this so that you know, right, if I want to go in for a sell, I want it to be as close to this 417 price as possible. And the highest price went to, if you look from here, is about 390. Okay, 390, 397. This is the highest, but this is the main area price. Let me just adjust it so I can go off this wick here. So the reason why I'm putting this here is because this is the shadow of price. The price, as you can see, this red candle went all the way here. Touch this blue one here. This one just closed below it. Once again, I showed you that if price closes below a line or below an area, it's a sign that it's going to continue to go in that direction. Okay, so as you can see, it's broken through and we've continued to have it go down. So you want it as close to this price as possible. So let's go on to step number 3. So we've done step number 1, which is you're checking your 5-minute time frame. Is it a good setup? Yes or no? If it is, go to step number 2. Step number 2 was the 1 hour time frame where we marked up our support and resistance zones. So once you've marked that up and you can't find any areas, you go to the step number 3, which is 15-minute time frame. On the 15-minute time frame, you're now looking for mini support or resistance zones. So any other mini area that price may try and pull back up to or break out from. And once you've done that and you can't identify anymore, then you can go to 5 minutes. This once again comes with practice. So my advice would be to you, find 2 currencies that look really, really good. Find two currencies that have a good difference in strength, stick to those currencies, do your marking up, because it's easier. Once you've marked it up, you just have to focus on that pair. You might have to sit there for 5-10 minutes, sometimes 15 minutes, but as soon as price gets to the price you're waiting for, then you can take the trade. It's better for you to wait and focus on two currency pairs rather than looking at a whole host of 30. You know, once you become more skilled, you can start to do that. But starting off, or, you know, still finding your bearings, stick to two main currencies that have good strengths. I'm just seeing a red dot, so let's open up the chat box. With Liberty, do you mark up the wick or the body of the candle? I know with I know with Hourglass we mark up both. Yes, so let me go back to 1 hour. So with the 1 hour time frame, if it decides to let me go there, I don't want to refresh it. There we go. So with the 1 hour time frame, some people mark up the wick. So if you've ever been on Kenvry Mo's session or Oladapo's session that they teach, so Oladapo does 7 a.m. Kenvry does 9 a.m. or 2 p.m. on various days. They mark up the wick. Why? Because the wick is the next area of potential resistance or potential support. So they mark up both. I mainly go from the body, but I always bear in mind where the wick was or where the wick moved to, because just because it's touched that area once doesn't mean it's going to keep going back there. But this served as the main support. So that's why I've marked it up in a thicker red. And I've done a thinner line for the wick of this one candle. Yeah. So yeah, so back onto step 3, I think I said. So 5 minutes, step 4. So step 5, you've done 5-minute check, you've gone to 1 hour, you've dropped to 15 minutes. We're now back to 5 minutes where we're going to take our trade. And now that you can see this, I'm going to open it up nice and wide for you again. Okay, so ideally the best area to sell from is, as I said before, from as close to this line as possible for a sell. What price has been doing on the 5 minute, don't forget you can still mark up in 5 minutes. What price has been doing here, if I just quickly show you, let me zoom in here. So wick pulled up to this line here, which is at what, 388. I can see the price here, 388, and it's dropped down. It's called for a sell, but look what price has been doing. Price didn't move, price rejected. So this is going to be our new support. Okay, it's always good to kind of look back and see what price has been doing. I'm going to put one here. Okay, we'll just move that accordingly. There we go. Okay, so price has broken through, pushed down to this area, but it's called for a sell. Why shouldn't we take that sell? Well, we know what not to take it because we want to get as close to this pullback as possible. Look what happened. So we're waiting for price to come as close to this 388 again. We've waited. Oh, look, price is back at this 388, so at 386 specifically. It pushed all the way to 394, but had you gone in for 5 minutes, 15 minutes, 10 minutes, you would have been good and you would have still cleared that trade. Okay, you could see another one. This is as close to it as possible. So this one moved to 377. Even if you'd done a 15-minute trade, you would have still cleared it. So 5, 10, 15, price closed at 369. You would have cleared it with a small points between them, but you would have still cleared the trade. The point is, are you clearing or not? We've got another one here, right at the top. Right, where did this push to? 382. Remember I said we wanted it to get to 388. Still quite close to it. You could have waited for a price to get to 388 or taken a risk and gone in at that 382. Taking it for 15 minutes, 5, 10, 15, you would have still cleared that trade because price closed at 355. Okay, and so on and so forth. So this is how you can find or identify good setups. If this were me now, I know it's still dropping. I still know the Canadian dollar is stronger. So I'd be waiting for any pullback again to this 388 before it decides to go through. Also, a little tip while I remember is when you see these strings, moving into the cloud, you might find a few more reversals than what you would usually find. And the reason for that is because it's not clear. So if we look previously, to where it's underneath the cloud. Can you see these strings are not in the cloud? When we start to see clouds, these strings going into the cloud, that's when we start to find a little bit more reversals, because it's showing that the market wants to do a little bit of a pullback before it does its thing. Okay, so where if we look before, where it's not in the cloud, but has a good starting point, it drops perfectly fine. 5, 10, 15, clear. 5, 10, 15, clear. 5, 10, 15, you would have still cleared that one. 5, 10, 15, clear. So you've got more. And as soon as it starts to move into the cloud, which is from here, when we get a sell, look at that. 5, 10, 15, you would have just about cleared it had you entered straight in at this close of the last candle. But we don't want to be cutting it fine with our clearing. We want to see a nice distance between it. Okay, so that is for a sell. Let us look at a buy example. Before I move on to the buy example, does that make, is that clear? Does it make sense? If that is clear, type a 4 in the chat box. So if it is clear and you understand that, type a 4 in the chat box. So then I can move on to discussing identifying buys in the market. Please feel free to unmute yourselves or type your question in the chat box. Great, so everyone's got loads of 4s. Okay, if you do have a question, just let me know. Before you take the trade, do you have to wait for the sell sign? Ideally, so when you're starting off, wait for the sell sign to appear. What the sell sign does, and the only time the sell sign will appear is when it crosses the thick red line that you see. Let me just show you. I think that's the thickest I'm going to get it to be. But maybe if I do it purple, should I do it green? Yeah, green. Let me do it green so it's a bit more apparent. So when this line crosses this thick one that you see here, that's when this sell sign will appear. So that's essentially when you're going to enter. Most of the time, sometimes you have your Liberty here and you can have your broker here, or some people use 2 screens. As soon as it crosses, that's where you want to enter. So had you entered here, you would have entered on the cross of this, which is around here. Even if you got in a bit later and it was maybe here, 5, 10, 15, you still cleared the trade. So it's great to only go in when you get those sell signs. If you do decide that you want to go in without the sell signs, for example, here, price moved up to where we saw earlier, this 388, you could still go in. And it's even got the little Wi-Fi symbol. So can everyone see this little purple symbol? When you see this purple symbol, it's a sign from the actual alert panel to say go in for a sell. It's definite when you get here. When you get this little Wi-Fi symbol, going for a sell here, it hasn't got a sell sign, but it's telling you to go in 5, 10, 15, clear. Okay, so you can definitely go in once you become more skilled on finding your points of support and resistance. You'll be a bit more clearer. Peter, 3.5 is getting clearer. Great. Any questions? Keep asking me while we're on the call, because don't forget, you know, sometimes some people don't really think about a question yet, but when they now go to do the trade themselves, they then have a question. So if you have any questions that pop up while I'm explaining, just type it in the chat box and then we can all discuss it, because maybe your question might help someone else, and maybe someone's answer or something that they've experienced might be like, oh, and someone be like, oh yeah, that's true. I've always wondered that. So we're all here to learn and level up. So let's move to a buy example. What's that?
I have a question. I have a question.
Okay.
And it's gone now. Yeah, sorry. Yeah, so my question is,
yeah.
If, for example, it's I'm on GBP CAD and obviously it's come up with the sell sign. The last candle came up with the sell sign, and it seems like it's going to continue to drop. And would, in this instance, would you say go in when at the beginning of the new candle, once like you've seen that, okay, the last candle closed with this, with it came up with a sell sign, would you say go in, or would you say you don't go in?
I'm gonna still go in. So if I'm still gonna go in at the close of the last candle, I'd want to go in as close to the last where the last candle closed as possible.
Okay.
Yeah. So for example, 1 second. You're getting your pajamas. Okay, that's fine. Take it to daddy.
Daddy is at the door.
Okay. Sorry. So let's say, for example, you've gone in, on this one that I'm showing here, you want to go in, making sure you go right here at the close of this candle, or you want to try and get in as close to this as possible. Let's even go and look at another one. Where's dropping? Let's go in for a drop. Let's see. Right. For example, this one. Don't forget, with the sell candle, they close at the bottom for those that aren't too sure. And with a buy candle, which is a blue, they close at the top. So this candle here is closed here. I want to get in as close to the close of this candle as possible. So on your broker, you will see it's dropped down. It might do a quick pull, really quick, pull up back to where the last close of the last candle was, and then continue dropping. You always get a pullback. Price doesn't just continue dropping in one straight line. It will always pull back to a certain point. So you can get in at the close of the last candle if that's something that you would prefer to do, if you know this is going to continue dropping. I mean, look at this one here. Although the web strings aren't closed, as spread apart, but if this were to be a great setup with the things strings spread apart, you could have gone in again and again and again. But how do you know whether or not you want to do that? So if I know you're experienced, Adette. So if you were looking for a pullback, if you're looking for a pullback, I would want to see some sort of structure. So I could see that price went all the way here before it rejected. So I would want to pull back to this line, because as you can see, price tried pushing down, rejected off, broke through. So 100% price has to come as close to this as possible. 361. If you had gotten in, you'd be good. So yeah, that's a good way of a good point to make if you do want to continue going in for a trade.
And I have one more question.
Yeah.
So if you're doing a 15-minute, would you say should you go off the 30-minute analysis, or should you go off the 15-minute analysis or the 5-minute analysis if you wanted to take a 15-minute trade?
If you're taking a 15-minute trade, then you can look at look at either. That's just a preferential thing. If you want to do a 15-minute trade, I always execute on 5 minutes. So when I say execute, it means I'm entering the trade in off of the 5-minute time frame. However, but you can check the 15 minutes to see what price is doing. And the reason why you're checking the 15-minute time frame is because that is the amount of time you want to go in, right? So the reason why we do the 5-minute one, it's just broken down. You're able to execute it a bit more earlier. And obviously we go in for the 3-candle rule. So if each candle was representative of 5 minutes, 5 times 3 is 15. Even if you look on the 15-minute time frame, it's the same thing you're seeing. It's just that it's all bunched together. So like now we're looking at this candle here. It's called for a sell. When it crossed here, we drop it and look at 5 minutes, it's telling us the same thing. It's just that it's been broken out into smaller pieces. So looking at your 15-minute or your 30-minute is just a preference. I don't ever really look at 30 minutes. But once again, that's just my style. Millie Mills does check 15 minutes and she does sometimes look at 30 minutes. But for myself, if I were to glance at anything, it would only be on the 15-minute time frame and not really the 30, because whatever price is doing will always show on the smaller time frame before it shows in the higher time frame. Higher time frame, if you're doing long-term trading, is king, obviously, but because this is HFX, which is high frequency, we want to just see as close to the time period as possible.
Okay, great, thank you.
You're welcome. Any other questions? Any other questions? Okay, fab. So let's look at a buy example. Let's see. AUD JPY is showing a good buy example. Why? Because AUD is 59, JPY is 21. You can see that it's moved into the cloud. And remember what I've said about this. So once it moves into the cloud, you'll find more reversals, and it started moving into the cloud from here. And so if we look before here, when it was above the cloud, we've got some nice buys. Okay, so it started spreading out. As you can see, it's done its pullback. Got a buy. So 5, 10, 15. This one would have been a loss. So let's mark that one up. This would have been a loss. Let's mark this up. I'm marking up red. So green, blue is clear, red is a loss. So this one would have been a loss. This one would have been a win. So that's a clear. So 5, 10, 15, you would have cleared that one. If you'd gone in on the next one, 5, 10, 50, that would have been at the skin of a teeth. That's probably like 1 or 2 points. You know, like when you're 1 or 2 points away from clearing, all depending on where you get in on this trade. Because as I said before, this buy pops up when it crosses the line. So you would have entered the line here, which is at price 193. And this price closed at 197. So what's that? 4 points. That's 4-point difference, all depending on where you got in. This one is a buy, 5, 10, 15, you would have cleared. 5, 10, 15, you would have cleared on that buy. And obviously now it's starting to move into the cloud. Okay, so as you can see, it's starting to move into the cloud, which is where you find more reversals. So this one, you would have just still cleared this one. So 5, 10, 15, it's closed up here. And now we look for buys while it's inside the cloud. 5, 10, 15, clear. 5, 10, 15, down here, clear. 5, 10, 50. So yeah, you've got lots of different ones. However, on this one, you would have lost. So this one would have been a loss. All these other ones would have been clears. So this one, 5, 10, 15, that would have been a loss because it closed way below where you entered. Okay, but all the other ones would have been clears. And don't forget, you only really need 4 trades, 5 trades a day. It all depends on where your account is, what your compound plan is. Everyone should be following their compound plan, should not be over trading. If you do want to, compounddaily.org. If you know, if you're all about I need money and you're looking at short term, make sure you're compounding one account. So maybe you've got an account that you grow daily, that you just, once you hit your target, you stop. And if you want one that you can just go mad and crazy with, open up a separate account. Do not do that on your one account, because it will affect you. It will affect you. You know, you'll go into mood. So it's always good to be disciplined, at least on one. So let's say, for example, you started with 500, but maybe with lack of knowledge or the understanding of independent trading, you're now on 450. Update your plan. Just type it in at 450. Make sure you've either got your 5%, however many days you want to run it for. Some have done 180 days because, you know, like anything, give yourself 6 months. Even if you think about starting work somewhere, how long does it take you to settle in? 6 months to a year, however long you want to, you know, based on your own time. Everyone's time is different. And where it says daily reinvest rate, just make sure it's 100, including weekends. We click no because the markets are shut, and then you work it out. Okay, so based on 11 days, so in 11 days time, really and truly, as you can see, I've put the days 11. In 11 days time, your account should be at 769 from 450. If you do longer, obviously it'll be more. Okay, so just make sure you're using the compound plan to your advantage. But anyway, I was looking at buys, wasn't I? So we've got this inside the cloud. High possibility that is going to pull back to a certain point before it decides to go up for a buy. It all depends on the strength. But as you can see, we've got loads of buys. We've got 2 losses in there. If I really want to be picky, let me try and be picky. To try and see ones that we wouldn't have cleared on. Yeah, so I can only see 2. What, 5, 10, 15, that was the last one. Yeah, so I can only see 2 out of all of these ones. So that is from 4 this afternoon, so about 4:20 all the way until 7. So 4 till 7 based on the numbers I'm looking at. Okay, so make sure that you are writing down, making sure you're documenting it, whether or not you have an Excel sheet. Maybe there's certain currencies that work better for you than others. If you're just doing it just based off it, you need to write this. I know it sounds long. I know it might seem very long-winded or unnecessary, but it does help you. I'd say that from experience as well. The only currency, as many of you know, I do not touch at all in any way, shape or form is CHF. I don't like CHF pairs. So anything that has CHF at the end, I don't like to trade. Why? Because I tend to lose those trades. I tend to lose CHF trades. And what entices me, And what makes me go to that trade again is if it has a high payout rate. Maybe you go to your broker, it has 82%. I'm like, oh, I'd love an 82% payout rate. But why am I trading a currency when I can just, when it doesn't do me nicely? So you just stick to pairs and currency pairs that, you know, that you find work for you. So yeah, that is a buy essentially. It's the same principle. So we do step 1, 5-minute time frame. Is it showing good signs of a good setup? Now this one is, it needs to pull back to a certain point, but we want to be ready for that point. So if we go ahead, go to step 2, if it looks like a good setup, which is on the 1 hour time frame. If it comes like this and it's all big and scattered, just click auto here at the bottom and it will just arrange it for you better. So let's clear all of these lines I put in. There we go. So now that you are on the 1 hour time frame, we're doing the same thing that we did explaining it on for a sell. So we're looking at high points and low points, which are your support and resistance zones. I know this is going back quite far, but I can see this served as a strong resistance zone across. As you can see, price touched it, dropped, price touched it. Obviously, it moved up a little bit higher, but ultimately it still closed below it, dropped, went up to here again. So you can do the wick. Once again, I'm not saying you can't do the wick, you can do the wick, but there's so many different, you're gonna find so many different wick points that you'll confuse yourself. So do a main strong resistant point zone. And if you are putting in any wick areas, you can do it in a lighter, a thinner line. Okay, so you can do that if that's something you wish to do. I only put in like 1, I never put in 2 because, but if I'm going in for 15 minutes, whether or not this is 15 minutes or not, price would have done what it needs to do. That's why I like 15-minute trades during the day, because price does what it needs to do and then behaves itself. If you need to go up, stay up there for a while, i.e. near the resistance, play around a bit, eventually you're going to drop and they stay below that point. Okay, so that I've marked up my resistant point. I'm trying to see if I can find any support zones. I can see clearly a nice main support zone here. And why is this the main one? Because the price has touched it, bounced off, touched it again, bounced off, touched it, but broke through. So it now created a new area or a new main support floor, which is here. Okay, I've got this zone. So it's either of these 2 zones. However, this is the one that was most respected because how many times did it touch it? 1, 2, 3, 4. So I've got 4 points. 1, 2, 3, 4 before it decided to break through and go back up into it again. Okay, so I've marked up that on the 1 hour time frame. I'm now going to go and look on the what time frame? 15 minutes. Okay, so you're going on to the 15-minute time frame. And once again, you're going to be marking up any other mini support or resistance zones. And once again, with practice and you doing this more often, and once again, if I said stick to 2 currency pairs, if you did this for 2 currency pairs, you will be able to you'll be able to be faster with your marking up. It doesn't take long. Okay, so once you've done that, you can look for any other mini support zones. I'm adjusting this. So this is one of the main reasons I go for body. So here I've put this line in as another resistance zone for this period, because why? Price touched it, rejected off, 1, price touched it again, rejected off, 2, price touched it again, broke through this time, but what did it do? It still came back into this zone, and then it served as a support for that, the new area. So it now created a new support, and it now came into the new zone. Okay, touching the area that we marked up on the 1 hour time frame. So if this is doing a pullback, it will either want to do a pullback to this zone here. Why am I doing this zone? Because it respected here, and it's also supporting it here. So it'll either want to do a pullback to here or here. I know this now. So i.e., unless price breaks this red line. So remember what I said, when price now breaks and closes. So what I mean by break and close, this candle, you can see the wick. The wick is the line. If the body closes above into the line, so this is closing above, that means the main body, all of this is all blue. There is a high sign that it wants to now start going up, but it didn't. It rejected and closed below. So we're still not there yet. If I want to go in for a buy, I want this to close above. If price continues going down, then I'm going to get ready for my new buy entry, which is either going to be here or here that I marked up. Okay. Last but not least, step 4, which is going on to the 5 minutes. Just move this. Here we go. Okay, so on the 5 minutes, as you can see, like I said before, price is inside the blue cloud, which means what? You're going to have lots of reversals like I showed you earlier. So we're going to be either waiting for price to come here, which is the last supported area on this area here, or we're going to wait for it to break through and close here. We do not want to take gambles. We don't want to, it might do this. I'm just going to risk it because that's gambling. You're not here to gamble. You're here to invest and profit from these markets. Okay. You want to invest and profit from these markets. So you're going to be either watching it. You know, if you are using TradingView, you don't have to sit here twiddling your thumbs all day watching the chart. You can go onto TradingView. If you've got an actual plan, you can set up alerts, or there is an app actually. Let me remember what it's called because I have just set it up on TradingView. There is an app called Core Levels. So I'm just going to show you what it looks like. And this one you can get for free, actually. It's free. It's a free app. I'm not sure if you've got Android because I don't like Android people. I don't like Android. Core Levels. There we go. So it looks like this. I don't know if you can see. And this is a good app because you could just click the currency, type in the price you want it to alert you on. And once price touches that area, it will alert you. Okay, so good app if you don't want to do that. But yeah, you could just set an alert. So for example, now on AUD/JPY, I would select that currency. I'm waiting for price to touch this point, which is 262, or I could put on a different alert for price to touch 176 or near it, not touching it and bouncing off. So once price is coming to that area, it will alert me. I can then go onto the currency, onto Liberty, and then look at that. It is called Core Levels. So take a screenshot. There we go. Core Levels Market Assistant. That's the only one I have found that I used to use. I don't use it anymore because once again, I have the alerts set up on TradingView. But there you go. I have one level my last one was on EUR/USD many moons ago for that price. So yeah, it's a good thing if you want to have an alert on price rather than watching it. But yeah, let us move on. Is the buy, are the buys and the sells on Liberty coming together now? So if that also makes sense, type some 7s in the chat box. So if that makes sense, type some 7s in the chat box. Pardon me. Type some 7s. Fantastic. Great, great, great. Thank you, Nella. Yes.
You know, on Liberty, it has like the entry price. Do you ever look at that when you're marking up or waiting for the price to which to enter?
Yep. So on this 1 hour, on the 1 hour, you see here, it told you the entry price 5 hours ago. So you know that little Wi-Fi symbol. Let's just go back to GBP. You know that Wi-Fi symbol I showed you, this one here? That's where it calls it. So where you see 5 hours ago, that was the last time it called you to go in for a sell at this price. And if you look where I've actually marked up, if you had gone in where I marked up, you would have actually won, but it also called for a sell there using that Wi-Fi symbol. So this Wi-Fi symbol is an indicator of where to go in on the market. So there it is right there. So that's the only time you would really look at it. If we look at the 5 minute one, if we look at the 5 minute time frame, need to make this bigger. Don't know why this Wi-Fi symbol's all the way up here. I haven't got a clue. But yeah, so it called for a buy at 383. So let's go and look at where 383 is. The coordinates. So they called this price at 383. for a buy at what time? 11 hours ago. So that was a long time ago. I don't even know where 11 hours is. So 8:45 in the morning. Let's go and look at that. Where's 8:45 in the morning? Let's go mark 8:45 up first. 8:45, 8:45. Here we go. So it called for a buy. Let's mark that up again. 383. Yes, so it called for a buy here. Obviously, price wasn't even at this level. So where I've marked it up, so 8:45, it called for a buy. Price wasn't even anywhere near there, so it would be invalid. And that's me looking on this 5-minute chart. But on the 1 hour, where it says your entry price is just relevant to that Wi-Fi symbol. So you still need to just double check as well. Okay. Please, what is the name of the website that has the compound plan? Oh, thank you, Gloria. That was nice and quick. She read my mind. compounddaily.org/calculator. Have it so that you don't have to print it, even if it's a thing of taking a photo of it, or what you can do. So let me just go into this and change this to 180 days. Okay, so for 100, maybe I should just do 90. Do 90 days. Okay, so like 90 days, 436,000, it breaks down. So from tomorrow, it's telling me I need to earn £22.50. That then means I'm only going to be putting down 3% of my account. At no time, don't forget, this is me starting on 450. That means if I have £450 in my account, I never want to risk more than, let's see, 3%. I never want to risk more than £13.50. So each trade I put down must be £13.50 or less. And if you've put down a £13.50 trade and maybe your payout rate is 70, let's go on a lower amount, the 72%, that means my profit from that first trade is £9.72. So £9.72, that's the long way of doing it. £22.50 that I need to earn divided by £9.72. If every trade, each of the trades I'm taking is that 72%, it means I only need to take 2.5 trades to basically make that amount. It's not a lot. But once again, this is where most people go wrong. Is that it? What's £22.50? Let me keep going. And most of the time when you keep going, sometimes because you go and make errors such as over leveraging, you go and put more on the next trade, or you over trade, or you've gone and clicked the rollover button, goodness knows, all these little things are the mistakes that people make. So that's why I said choose one account, compound on. Maybe one account is now what, maybe you want to try and do that with a demo. Just do anything on it. Don't forget, it's a demo, it's not your own money. But slow and steady does win the race. So as you can see here, we also got someone in our team, I ain't going to mention no names, who is nearly at 5 figures. And November, December, January, February, March, April, May, June, July. So she's been 8 months. She's nearly at 5 figures. You know how great that is? And that's just on one account. She's got 3 different accounts. So, slow and steady wins the race. And it is a matter of, it's not going to come overnight. You've just got to really want it. And if you are finding it hard, keep going. Watching things over again, you think, I'm bored of this. The things worth having weren't supposed to come easy. Remember that part. So as you can see here, it's starting small earnings. And obviously by the ending of your 90 days or however long you've given yourself, that should be your last trade. And obviously this should be the amount that is in your broker account. We've also got someone on the call that withdrawed. We've also got someone on the account that has withdrawn a nice sum of money, a very nice sum of money. But one of the things that I wanted to say was, if you are withdrawing, make sure that you're not if you've got, for example, if you've compounded your account to this 36,000, don't just be like, now I'm ready, let me take my 36K. No. If any of you have large sums of money in the bank, you will know that they'll give you stress to try and take that money out. So do it small. Start off with maybe just withdrawing 250, 500, 700, and build your way up. You have to build a relationship. If this is going to be your first time withdrawing, you can't just build up an account, be ready, and then take out 36K. Don't work like that. Plus, you want to leave some in there anyway to continue to grow a certain amount on top of. That is how Matthew Thayer did it. please explain the rollover. Okay, so rollover is giving yourself extra time. So on your broker, at the bottom, you're going to have, you will have double up and it will have rollover. If you've gone in for a trade at, let's say, for example, this time down, which is 9:03, and you are in a trade for 3 minutes. If in that 3 minutes you think, I'm in for a sell, but I think I just need a little bit more extra time, it's definitely good. If you know that price is going to go in that direction, it just needs a little bit more time, you can click rollover. Now, what rollover does is it takes an additional 30% of your account. So if you've put down a £5 trade, for example, for 3 minutes for a sell, price is going, it's going in and out of profit, but you know it is definitely going to go in for a sell. You just need a little bit more time to let it do what it needs to do. You click rollover. Once you click rollover, it's going to add 30%. So plus 30%. So it's going to charge you £1.50. So in total, your trade is not £5 anymore. It's now £6.50. So if you win the trade, you're going to be earning the percentage payout on top of £6.50. If you lose the trade, you lose the £6.50. Yeah, so it's just rollover gives you additional time. It just takes an additional 30% extra. Now, when you're playing with the smaller amounts, like on the lower side of the 50, if you're doing £50 trades, it's not that bad. When you start putting down like £700 trades, £800 trades, clicking that rollover, it takes a lot. So if you think about 700 plus 30%, that's going to take an extra £210. Very painful. So don't rely too much on rollover. However, once again, on Millie Mills, which is the same area I recommended earlier, she has it here. So good explanation on payouts, rollovers, and double ups. Okay, so that is there as well. Brandon Lee and Josh Boyd also explain on that as well. So I hope that makes great sense. Are there any specific points or areas that you would like me to go over again with Liberty? If there is, let me know. But other than that, that is the end of today's Liberty session. We are back again next week, Tuesday at 8 o'clock, as always, by God's grace, to take it further. But I hope you found this enjoyable. Once again, if you want to go over this and what we've learned and what we've discussed, if you type in on YouTube, okay, and then you type in my name, let me just move this chat box out of the way. So Chante Oduwole, it is there. So every single session I've ever done is there. Just make sure when you are watching any of the playbacks from before that you're clicking the subscribe button and you are clicking the like button if you found it useful. But other than that, I hope you have a fantastic evening. Take care and God bless. Let me just stop the recording now. There we go.